Eric Muathe at Muathe.com. Let's take a look at a stock that has done well for subscribers for Muathe.com. Let's take a look at mCig, and this one recent peak here in late November and mid-December, and again in late December. So why were we looking at this one as a potential candidate? Because based on technicals and how the sector was performing, we knew that if the stock clears the weekly high going back to about November 2016, which had a closing high of 0.1620, that was the buy point based on the close on this month in October 2016. So once it broke out, of course, it gave us the buy signal. And over the last 3 weeks, we've seen a good run, moving from about 16 cents to the highs of the week here at about 38 cents. And one of the things that we knew was that since the stock had traded above 69.1 a few weeks before that, we knew that if it went back above 69.1 over the next couple of weeks, we could see the potential of such a move. So the move so far is not a surprise. Maybe the magnitude a little bit of a surprise so quick, but this is because it meets the minimum requirement based on this speculative play. In fact, if somebody wanted to be aggressive, this was also a buy somewhere here at about 10 cents. And I'll show you why, because if you take a look at the 5-year, in fact all data weekly chart, you can see if you go back to the highs of 2014, this is where it broke down. And that brought the stock off the highs here. We draw a line from that break, and you can see why it became relevant, because once the stock cleared that line, which was somewhere here under 0.4 cents, whew, that's a low price. So it moves above the blue line there, comes back and tags the blue line again, and that's what I'm saying. This was your rebound entry. Once it found support on a weekly chart on this line here, you knew that there was a good chance with that support, which by the way was uniform action support to the blue line back above it. Chances are that you might see a strong recovery, which is exactly what you see here. From a speculative argument right now that the stock is back or is trading above 69.1 on the monthly, as long as it is trading above 69.1 on the monthly, one can expect the stock to be stable, maybe even see higher prices. The last time it stayed above 69.1 was in early 2014 during this explosive phase. So as long as it's holding above 69.1, it might have a chance of seeing much higher prices. By the way, if you take a look at that when we recommended the stock to subscribers, was here. This is from my website, and again here, and also here, and you can see the price, for example, in mid-December, just before it broke out above the buy point of 0.1620. One thing I did point out, or did not point out on the weekly, was, let's go back to that all data weekly. Take a look at this explosive run here. So there was a breakout, which is similar to the current breakout here, because we had gone above 69.1 here during this run. We come back and break out above the previous weekly closing high. We also move back above the magic number of 69.1 again, which might explain why we have this explosive run. And right now we are seeing the same thing. We had gone above 69.1 during this phase. We come back and break out and also recapture the level back above 69.1 on the weekly RSI. Additionally, take a look at this 50 RSI bounce with uniform action. In other words, we go below RSI 50 and back above it with uniform action. As we always say, that tends to be a good support level. generally suggesting that you're gonna go to new highs, and this example is a perfect show and demonstration of how that is correct. So always be on the lookout for stocks that pull back but show uniform RSI support when coming to test the 50 level on whatever time frame you are trading. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS. Woo!